Stocks slip after a firm open. The Nifty and the Sensex trade near the day's low ahead of the weekly F&O expiry. FMCG and autos eke out gains while financials and utilities drag.
Bajaj Finance takes a beating after it posts AUM growth below estimates. Expectations of growth moderation going forward also hurt the stock.
Business updates from Marico and Godrej Consumer Products point to early signals of a likely improvement in demand. FMCG stocks rise on cue.
Tire stocks run up on a decline in rubber and crude prices, while oil marketing companies, they perk up on a sharp fall in crude rates overnight.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, as always, Sonal Bhutra as well as Ekta Batra. It's turning out to be a weak session in today's trading session. In fact, the first half was some bit of consolidation is what we saw. But in the last half hour or so, there has been an accelerated decline on the downside. We're at the low point of trade. And this, remember, comes after a decline that we saw yesterday as well. Over 200 points on the Nifty yesterday was shaved off, and now another 65 points. The culprit, the biggest one of them, is the Nifty Bank, which is down almost 0.8% as we speak, 350 points after declining over 500 points in yesterday's trading session as well. And no real support coming in from any other sectors apart from FMCG, which is trying its bit and is the only one which is in the green right now. Reliance is the other one which is currently at the low point of trade. The broader markets, while outperforming, we still have more decliners than advancing stocks. Hi.
Hey Mangalam. Hey Ekta.
Hi Sonal. Hi Mangalam. Yes, absolutely. It's turning out to be a session where we are definitely cautious. It is the FOMC minutes which seem to be weighing on the markets at this point in time. Lot of stocks to discuss, but let's kickstart this show. In fact,
yes, let's go ahead and do that, because we are going to be focusing on the auto space now. After 2 months of adrenaline rush, auto retail for the month of December 2022 went into lull. Nomura is also cautious on the passenger vehicle sector and expects industry growth to slow down to just 6% in FY24 and 8% in FY25, while strength continues in MHCV sector. To discuss the demand trends, we are now joined by Kapil Singh, who is the head of consumer and digital commerce auto equity research at Nomura, and we'll also be joined by Manish Raj Singhania in a bit, who's the president at FADA. Kapil, good afternoon. Thank you so much for joining us. Well, you're expecting just a 6% growth in PV volumes for FY24. That's where you do see that there could be some slowdown in growth as well. Is it including the SUV and EV makers? And what is leading to the slowdown that you're expecting?
Hi, good morning. This is including the EV and SUV makers. And the reason that we think that this slowdown will take place is because first of all, the base is quite high. We will have almost 25% growth in FY23. And then there are cost increases that are taking place. In some part, it is because of regulatory reasons, where you have the BS6 phase 2 coming up from April, and then you have the 6 airbags becoming mandatory from October. And there is a general increase in interest rates as well. So we think all of these would lead to slower growth. Nonetheless, it will still be a pretty healthy level from an overall industry volume point of view, but it's difficult to see the same kind of growth sustaining in FY24.
Okay.
Right.
Well, we have Manish Raj Singhania, who is the president FADA, joining into this conversation as well. Mr. Singhania, welcome to the show. Nomura is highlighting some amount of headwinds of passenger vehicle growth going into next year. What is your sense? They are estimating around 6% growth in FY24, and that would probably pick up to around 8% in FY25. Can you just detail what are the trends that we're probably seeing in the passenger vehicle segment? Is there any kind of room for maybe even price elasticity at this point?
So for passenger vehicle segment, what is good is we have a good order book available with us. And on top of that, EV models are yet to penetrate this segment. So a lot of things happening there on the booking front, and as well as EV penetration. A lot of new models will be coming in this segment in coming 2 or 3 years. So demand is definitely there, and we can see good apart from addressing the existing bookings, we are continuously getting new bookings also in the passenger vehicle segment. So and with the slew of launches in SUV segment, continuously pushing up the PV segment, it's a positive for the overall year. But definitely, as he already said, this kind of growth would not be there. But we do expect a single-digit growth for the year 2023.
Right. You expect a single-digit growth for the entire year 2023, but Mr. Singhania, for the first quarter of 2023 or the fourth quarter of FY23, there are a lot of headwinds as well. I mean, there is the BS6 Phase 2 norms kicking in shortly. We have vehicle price hikes which may continue to impact demand. At the same time, with rising interest rates, the cost of ownership of vehicles increases. Could you give us a sense of whether you expect the growth to be back-ended or, front-ended, or what's the kind of estimate that you have for the first quarter of calendar 2023?
So all these factors that you have talked about is definitely keeping a huge stress on the entry-level segment, and we can really see the entry-level segment continuously degrowing on a month-to-month basis. And what is good about this last quarter is, from 1st April, we know BS 6.2 norms coming in that will definitely push up the vehicle prices. So January, February, March will be, if OEMs gives a good schemes, then this can be a very good quarter, because after this, there's a different price increase. So a good time to buy vehicle if anyone is planning. So I think overall this quarter can be optimistic for the PV industry.
Okay, so optimistic on the PV industry, but Kapil, your point on this, when we are talking about this is a good time to buy a vehicle, there are more norms coming in. There was a report I was reading that car makers would have to pay a fine of around 3,600 to 5,800 rupees because of the fuel economy norms, and these are to be complied to by April 1st of 2023. Is that something which could raise or increase the cost of vehicle ownership? And generally, the last 2 months, we were talking about discounting, which had picked up quite a bit. Is that continuing right now as well?
Yeah, so, well, the fines have to be paid by car makers, not really by the customers. So from a customer point of view, there will be no increase on account of this. But there will obviously be portfolio tweaking, which will be done by all the players. And I think to meet these norms, players may need to sell more CNG or more hybrids or electrics. So on that front, no real increase for the customers. But to the point that this is a good time to buy vehicles, I think particularly on the diesel vehicles in segments where vehicles are not having SCR technology, there the cost increases can be pretty large. So in particular, I think this next 2-3 months will be the best period to buy diesel vehicles before the prices go up another leg up post the BS6 phase 2.
Okay.
As discounting is concerned, generally December, because of stock clearance, does see higher level of discounting. So we will see a bit of drop coming in from January onwards. But on a year-on-year basis, we expect for FY24 discounting levels to be higher because stock availability will improve, which was not the case till last year.
Okay. Kapil, I wanted to get a little stock specific now because Maruti, for example, has indicated that they are very bullish on retail demand. But are the numbers indicating that December we had their total sales which were down 9% year on year, domestic sales were down 10% year on year, exports were down 2%. What is your reading of Maruti going into 2023 and in terms of the volumes that they could generate?
Yeah, I'm sorry, I would not be able to comment on stock specifics at this point of time. But generally as a trend, December wholesales is not the right benchmark to look at because there were certain supply issues which were there. So I would not extrapolate for the industry as a whole the December numbers. Also, keep in mind that because we are moving to new emission norms, OEMs would not like to carry inventory as we head into the next year. So January we are expecting will be a fairly strong month, and as the channel filling takes place.
Mr. Singhania, let's ask you the relatively tougher question here. While 2022 was good, it was still down 12% as compared to pre-COVID levels. Will 2023 be the year where we actually go ahead and cross pre-COVID levels?
So, if you look at the total volume of pre-COVID level, I think it's only the two-wheeler industry which has not been able to perform. Rest of these segments, PV industry created an all-time high figure. Tractor industry created an all-time high figure. Three-wheelers have recovered very well, and commercial vehicles are doing pretty good. So it's only the two-wheeler segment that is not being able to come to up to the mark of pre-COVID level. That clearly signifies the rural distress continues, and for a two-wheeler customer or an entry-level PV customer, the cost of acquisition, the operating cost, the interest rates, everything, and the price of the vehicle, everything is going up. So it's like and plus they haven't yet, it seems so, looking at the figures, they haven't yet recovered from the COVID distress also. So all this is a very negative for the two-wheeler industry and entry-level passenger car industry. So government, we really feel at FADA, government really needs to address this segment, and the right way to address this segment, because vehicles are a mobility solution. They are a necessity to this segment. The right way to address the increasing cost in every ways to make it accessible to this customer is bringing down GST from 28% to 18% for this segment. That would really give a good boost to this segment and address the mobility needs of the consumers.
Okay, all right, Mr. Singhania, Mr. Singh, thank you so much for joining us, for giving up a roundup of what's happening in the auto space. Well, that's all about the auto discussion, and with that we'll move on and we'll slip into a short break now, and we'll put focus on a couple of stocks which are in focus today, tire makers and OMCs. Stay tuned.
Many challenges right now around the world. In fact, India is probably the exception. There are parts, India, Middle East, Latin America, some of the other parts of Asia are the things that are green. And I think Europe and the United States are going to be challenged. United States, not yet, but I think 23 will be much harder.
How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else.
Welcome back. Well, a lot of stocks buzzing around from the broader markets, which are managing to hold their head above the water. So we have the mid-cap index, which is up around 0.2% at this point in time. But compare this to the other indices, the Bank Nifty, which is reeling under pressure, down around 0.8% at this point. A lot of the financials are under pressure, especially post their Q3 updates. Case in point would be Bajaj Finance, which is the top loser on the Nifty. But let's focus on a couple of other stocks. OMCs, they're in focus after crude prices have fallen below $80 a barrel. Sonal is here to tell us more about it. Sonal.
Well, yes, it is of course a positive, and that goes without saying that how it'll benefit both the refining and their marketing segment, and also because of the fact that these companies have not gone ahead and cut prices in terms of petrol and diesel, so that gives better headroom in terms of spreads as well. So now second half of FY23 is expected to be much better for first half, and this will lead to a sharp increase in their marketing earnings as well. So ICICI Securities put out some estimates as to what will happen in the second half, because remember the first half was really bad for their marketing segment, losses ranging from from 16,500 crore rupees to 28,000 crore rupees, and that is just in their marketing segment. So that is expected to reverse, and they are expected to gain around 13,000 crores to 20,000 crore rupees. That's across the sector. HPCL has the highest exposure to the marketing segment. Around 57% of their EBITDA comes in from there. So it tends to benefit the most. And apart from that, also HPCL is in focus because they forayed into petrochemical business. They will be pre-marketing one of the brand polymers, and the total capacity here will be 9 million tons per annum in terms of what they'll produce there. Additionally, they've also signed an MOU with NTPC Green Energy Limited. This is to foray into the renewable energy space. It will be related to RTC power, electric mobility, solar wind value chain, and also other aspects of renewable energy. So yes, that also is working well. The stock is up around 1.3%. It has come off from the highs, but still all these three OMCs in the green today.
All right, Sonal, thanks a lot for that. In fact, you spoke about crude oil prices being sub $80 per barrel. Do we have other beneficiaries as a result of that? Yes, tire stocks, they are buzzing today as the cost of key inputs like both rubber and crude fall. Sonia joins in with more. Sonia.
Well, thanks a lot for that. As you rightly pointed out, tyre stocks are doing very well this afternoon. In fact, Apollo Tyres is sitting at a fresh 52-week high. You have others like Balkrishna and Sia that are seeing big moves as well. Now, it's a double positive for them. On one hand, raw material prices are falling. On the other hand, demand has picked up across key segments like passenger vehicles. Now, if you look at raw material prices, as you rightly pointed out, both crude and rubber prices are under pressure. In fact, rubber prices are down 24% from the April 2022 highs, and crude prices are down 10% in just 2 trading sessions. And now crude prices are 40% lower than what we saw way back in June of 2022. Now, crude and rubber together make up 70% of the raw material costs for tyres. Hence, there's a big operational benefit over there. Natural rubber itself is just 50% of the overall cost for them. Carbon black is around 14%, and NTCF, which is nylon tire cord fabric, which is used in the construct of tyres, that constitutes about 12%. And even within that, both carbon black and the fabric use crude as input. So there is a further positive for these companies. In fact, many of these companies like Apollo Tyres have been showcasing an improvement in margins over the last many quarters, and brokerages believe that it will only get better for them. So Apollo Tyres, for example, in the past 3 quarters has seen an improvement from 11.2% margins in Q4 of FY22 to about 12% in Q2 of FY23, and the expectation is that the margins will further improve. Hence, these stocks are surging today. Back to you.
Okay, all right, Sonia, thanks very much for that. So yes, rubber prices are down over 20% from the levels that we saw in April of last year. Bajaj Finance is the other one which is in focus. This is after they reported third quarter business update post markets yesterday, and it's clearly disappointed the street. We have Abhishek joining in to tell us more about what the brokerages are making of that.
Well, Ekta, brokerages are not happy with the 27% YOY AUM growth, which they believe is actually below estimate. So customer additions has remained strong is what brokerages are saying, and they are saying that number of loan book is in line with what they had estimated. However, sequentially growth has slowed down given the fact that Q3 is actually a strong quarter for Bajaj Finance due to festivals. So quarter on quarter, the AUM growth of about 14-15% is perhaps the lowest that you are seeing in last 10 years in terms of Q3 over Q2. So either there was some festival impact at the end of Q2, or the company has lost market share is what brokerages are writing. So they see loan growth moderating going ahead. We have Macquarie, who has an underperformance rating and a target price of 5275 per share, while CLSA has a sell rating and the target price is 6,000 per share. Back to you.
Okay, all right. That is about Bajaj Finance. But Abhishek, you're also tracking RBL Bank, which is buzzing again on the third quarter update.
Well, the loan growth that RBL Bank has given in their pro forma business update is perhaps the best that you are seeing in last 3 to 4 years, either on YOY or quarter-on-quarter basis. And along with this, you have the CASA ratio, or the low-cost deposit ratio, which is the highest ever that the bank has seen. So deposit growth on a YOY basis at 11% is the best in last 5 quarters. The sequential loan growth, or the quarter-on-quarter loan growth, is 3%, which is the best in 3 quarters. The loan growth of 14% YOY is the best in last 3 years or 12 quarters, and the loan growth of 5.8% quarter-on-quarter is perhaps the best in last 15 quarters. The CD ratio, or the credit to deposit ratio, that's improved both YOY and quarter-on-quarter. So in a rising interest rate scenario, when your CD ratio improves, there are chances that the net interest margin can expand versus the previous quarter. CASA ratio, or the low-cost deposit ratio, that's an all-time high of 36.6% when compared to 36.2% in the previous quarter. This is unlike peers who have seen a dip in their CASA ratio on a sequential basis. Back to you.
Okay, all right, Abhishek, thanks very much for that. So that's on RBL Bank. That stock is up around 2.6%. But in an important piece of news, yesterday, the Union Cabinet approved the government's National Green Hydrogen Mission with an initial outlay of 19,700 crores. The mission targets investments worth 8 lakh crore and hydrogen production capacity of 5 million metric tons by 2030. To understand what this could mean for a key player in the space, we did speak with Mohit Bhargav, who's the Chief Executive Officer at NTPC Renewable Energy. Listen in to what he had to say.
That finally we have in place the National Green Hydrogen Mission. In fact, the industry was quite keenly waiting this announcement, and we hope that the framework which has been announced will actually help now kickstart the green hydrogen economy in the country. Yes, timeline was pushed slightly because the people who were involved in the due diligence have, I would say, taken some extra time, and we also needed some time in getting the clearances from the respective states. So that's more or less done. In fact, what has happened in between that, a couple of other people have also evinced interest in joining, so we have also given them clearance to go ahead. We need to keep in mind that the valuation is something, you mentioned a number of 10 times. We definitely hope to get a better number. Multiple question is something which will happen in due course. I mean, we still have to understand how the people are reacting. We have got very good response from quite a few people. So we hope to get a good valuation. Up to 20% dilution. So we are not saying it will be total 20%. If we get a valuation which is like hopefully better 10%, we might do 10. And the important thing is we are not looking at only one guy. If one guy gives us the entire stake valuation, the best valuation offer, we go with them. Otherwise, we could do it in more than one. It could be more than one entity also who will be given the stake, depending on whoever gives us the best offer.
Okay, that's the word coming in from NTPC talking about the big green hydrogen opportunity. But for that, we'll slip into a break. Up next, Microsoft CEO Satya Nadella tells CNBC-TV18 that India is an exception in the challenging global scenario, also warns of a difficult 2 years for the tech sector. Excerpts from the conversation follow after this very short break. Stay tuned.
Welcome back. Well, it's turning out to be a session where we are seeing some amount of sluggishness for the frontline indices. We've been pointing out that it is a couple of these stocks on account of their Q3 updates, which are seeing some amount of declines at this point in time. As you can see, below 18,000 currently for the Nifty, mid-caps managing to do better at this point. But let's move on to some important news. Microsoft chief Satya Nadella says he remains cautious on the short-term outlook for the tech sector, although the long-term picture looks promising. In an exclusive conversation with CNBC-TV18 Shireen Ban, he adds the next 2 years will be challenging after the pandemic-led acceleration we've seen in the sector.
Inflation, recession fears across most parts of the world at this point in time. Interest rates continue to move higher. Is it all flashing red on your dashboard? Is there any sign of green at all?
I mean, it's clearly many challenges right now around the world. In fact, India is probably the exception. There are parts, India, Middle East, Latin America, some of the other parts of Asia are the things that are green. and I think Europe and the United States are going to be United States not yet, but I think 23 will be much harder. So yes, we want to be very, very cautious in our outlook in the immediate term. Long term, I'm very bullish of us coming out, right? Because there are two cycles, I think, Shireen, that are happening. One is a supply cycle that's a very long cycle. That's a secular shift. We're not going back to 2010, 2011, because of the geopolitics as well as essentially the rejiggering of supply chains. I think we're going to have a supply cycle that's going to persist. The demand cycle is going to be a classic demand cycle. There will be some economies that will go through a recession. Some may be deep, some may be minor. And then inside of that, there will be pockets of growth like India. And so I think for us as a global company, we're not going to be immune from what's happening in the macro. We will have to also get our own sort of operational focus on making sure our expenses are in line with our revenue growth, manage the short term, but make sure we're investing for the long term.
And you can catch excerpts of this exclusive conversation all through the day only on CNBC-TV18. And time for a break now. Richard Jain of 5paisa.com will join in with some trading strategies.
All right, and now we have some pictures coming in from the UP Roadshow. This is with regards to a mega investment summit which is underway in Uttar Pradesh. We will keep getting conversations from the luminaries out there, a drive to increase the investment in Uttar Pradesh, boost its economy, and also get in some investments to boost employment out there. UP Global Investor Summit 2023. We'll keep getting you more comments, any sort of news that comes in out there. Those are some pictures that we're watching. But for the market, unfortunately, not looking very good. We're at the low point of trade, below that 18,000 mark. 17,950 is where we are at right now. And it's being led lower by the Nifty Bank, which is at the lowest point in today's trading session. And what's interesting is that before this, there was a setup where the FIIs continued to sell in our markets. In fact, at the start of the series, they were 57% long. As of yesterday, they were 36% long, and those shorts are now getting follow through, which does not mean good news for the bulls, because the FIIs yesterday as well for the expiry wrote about 1.35 lakh short calls. And as we speak, with the market falling below that 18,000 mark, we're seeing these call writers add to their positions. The 18,050 call, that's the one that should come up for you. We're seeing almost 1 crore shares added in open interest out there. That's telling you levels upwards of 18,060 could see some sort of congestion. 18,100 call as well. Almost 1 crore shares added out there in open interest as well. Bulls were hoping that the 18,000 mark, 17,950 to 18,000 holds. We had some put additions out there, but they've come down to just about 10 lakh incremental additions for a premium of 50 odd rupees. So 17,950 remains to be an important level to watch out for. Those who were writing the 18,050 straddle, which is a call and a put together, would be playing for a premium of 75 odd rupees. So they were playing for the range of 17,975 to around 18,125 on the way up. The question is, do we see some support at the 17,975 mark, or do we see further volatility here? If there is further volatility, all these writers will have to cover their positions, and we may fall lower to the 100-day moving average, which is closer to that 17,900 mark. How does that tie in with the technicals of the market? Ruchit Jain joins in. Ruchit, we're at the low point of trade. We consolidated for most part of the first half, and then there is this accelerated decline that we're seeing. Where do you think we go from here?
Yeah, hi, very good afternoon. I think, yes, although the FIS data remain negative, where they have formed significant short positions and their long short ratio is now around 35%. But no, technically, we have seen that the lower time frame charts are now in oversold zone, because we have already seen about 1,000 points correction from the first week of December. So I think before we see any kind of major breakdown, there could be some pullback moves again in the market. So I think ideally these are not levels to create fresh shorts over here. Rather, one should take a stock specific approach, and in case if we see a breakdown below 17,800, then only I think market would accelerate this downfall further. So for here, we are advising our clients that since markets is oversold on the lower time frame chart, there could be some bounce before we break those supports, and that bounce could last up to that 18,150 mark.
Okay, what about stocks, Ruchit?
Yeah, so we are trying to play more on a defensive front where some of the PSU names have been showing relative outperformance. So Petronet is one of the stock which is on the verge of breakout from a 3-year consolidation phase. Volumes have started increasing gradually. So one can go long on Petronet with stop loss below 214 for potential target of 232. And NTPC would be another defensive space, where some buying interest is being seen in last couple of trading sessions. So NTPC would be another stock where I would recommend to go long with stop below 164 for potential target around 179.
Hey Ruchir, thank you so much for that. Petronet reporting numbers on 20th January, much before the usual timeline as well. So that stock remains in focus. Thanks a lot for joining us though and taking us through your technical bets. We'll do one thing, we'll slip into a short break, and on the other side we'll get you more on markets and a lot of stock specific action. Stay tuned. Welcome back. While the pressure on markets continue, the Nifty is down 92 points as we speak at that 17,950 mark. So at the day's low, and a couple of these big names which are putting so much pressure. Bank Nifty, of course, is the big one there. So we have Axis Bank, ICICI Bank, these two big heavyweights which are at the day's low right now. And Reliance Industries, that too has touched the day's low. So that stock too, the biggest weight on the Nifty, which is putting a lot of pressure there. The other stocks include the likes of SBI. We also have Asian Paints and Titan. So some profit taking is what we are seeing in these consumer names as well. So yes, couple of these names which are putting pressure on the Nifty. The broader markets, though they continue to outperform, mid-cap index has come off from the highs right now. While we are discussing markets, let's also talk about the pharma space in particular. Ekta, you're getting details from the notes from Bernstein and also IIFL. They have written about the outlook for 2023 for the pharma space.
Well, yes, I'll start with Bernstein, which is written on the Indian pharmaceutical space. According to them, 2022 was a tough year when it came to Indian pharma. Largely, we are back to basics in 2023 with key parameters such as managing the ongoing price erosion in the US. Complex generics should probably come to the rescue for a couple of companies this year. Complex generics will possibly be stock-specific opportunities. Remember that. Secular return to volume growth in India is some of the key trends they expect. They expect margins to improve after what was a rather flattish 2022. We could start seeing some amount of changes according to Bernstein. So improving cash position for companies participating in Revlimid generic, higher capital allocation and OPEX spends in India. The sector valuations, according to Bernstein, is back at 10-year averages on the PE as well as the EV to EBITDA basis. Cipla, Sun and Gland are Bernstein's top picks. IIFL has written on it as well. They have an outlook for pharma 2023, which remains mixed. US generic market continues to be challenging. That's something they point out as well. Estimate high single-digit to low double-digit price erosion. Regulatory risk for export-focused companies has increased. Domestic India pharma market continues to clock 10 to 11% growth. Domestic-focused formulation companies will continue to outperform according to them. Top picks include Sun, JB Pharma, Torrent Pharma, according to IIFL.
All right, Ekta, thanks a lot for that. That's about the pharmaceutical space. But just keeping an eye out on the consumer space right now, we are seeing some moves come by on Marico as well as GCPL. Both of them reported their numbers. Marico is virtually at the high point of today's trading session, and Godrej Consumer as well, sitting with a gain of almost 2.5% Marico is up around 2%, slightly off the highs, in line with the way the market has declined. And that's primarily because their second quarter updates were largely better than what the street was anticipating, and importantly, the outlook for the fourth quarter also does not look particularly bad. With decreasing raw material prices and stability in inflation, they believe that maybe there could be some improvement in the rural market. So that's about a couple of stocks which are doing well in today's trading session. In an otherwise bleak market, we have the Nifty now down almost 100 points, sub that 17,950 mark as well. The Nifty Bank down 400 points. The mid-cap index too, which was outperforming, still is outperforming, has moved into the red. Let's talk about some market opinion. Then earlier today, we caught up with Tahir Bacha, who's the Chief Investment Officer Equities at Invesco Mutual Fund, to understand fundamentals of the market and his sectoral outlook. Listen in.
This sector probably is starting to get some bit of excitement on the back of possible avenue of savings once again, and that coming into play. And I think there's also a sector, as you rightly said, which is underperformed. Many of the stocks in this sector have trended down as far as the valuations are concerned, so relatively better. And we've seen them somewhat underperform even compared to the other to the general banking space. So I think that's probably starting to see some kind of that's probably leading to some kind of attraction as far as the sector is concerned. We were expecting a leg of improvement in the sector at the beginning of calendar year 22, and good part of it has actually played out either in terms of the demand environment getting somewhat better, especially in things like passenger cars and commercial vehicles, and also accompanied by some easing in oil prices and commodity prices in general, which also came to their rescue. But it's now not easy low-hanging fruit anymore, and like as I said, discretionary consumption is not entirely looking as robust. So we have to be a little more careful here. There are some pockets that we like, especially things like commercial vehicles, maybe tractors, agri-machinery, parts of passenger vehicles as well. There are still very clear, drivers of alpha and drivers of or pockets, at least, where we could probably see alpha generation. Much of it is kind of played out in 22, and some of the incremental impulses required for alpha generation in 23 are, as of now, not fully visible. So I would say maybe banking, financials is some area which is on its way to discovery. I mean, it's not as low-hanging a fruit as what it was probably last year. But that's one, and you probably might, start looking at some parts of global, sectors purely from a valuation perspective and purely from a view standpoint, such as things like technology or maybe even commodities for that matter.
Okay, that is some market opinion coming in, but with that, we'll slip into a break. On the other side, Manisha Gupta will join in with Jatin Singh, who is the founder and CEO at SkyMet Weather as winter grips North India. Stay tuned.
Welcome back, and joining us on the show now is Jatin Singh, is founder and CEO at SkyMetWeather.com. Jatin, hi. We usually get you just around monsoon and after that, and this time we didn't even get to do that. You were busy. But the way the weather has been changing, and I'll talk about India, and I did read your report, but the erratic weather reports that are coming across. We were reading a report earlier on how there is no snowfall this time around in key ski destinations. 15 to 25 degrees of temperature is what most of Europe is seeing right now. How concerning is that?
I mean, weather patterns are absolutely changing. You've had today there was a report by the IMD that we had the warmest December in 122 years. You're seeing a very warm weather in Europe now. That is damaging. Even in the northeast coast United States, Boston, New York have not seen the first snowfall yet, and that has long-term implications. If you remember, the summer was extreme in Europe. Now you're getting a winter that is not as what it should be, because they need the snow to recharge their aquifers. It also exposes people as well as agriculture different kinds of pests and diseases. So it is concerning. And the fact is that we know that climate change is happening. We are trying to negotiate whatever to bring down the temperatures. But I get the feeling that the train has left the station. Now we have to adapt and mitigate, as opposed to being able to stop it by lowering global temperatures.
Well, yes, there's a World Meteorological Organization report as well, Jatin, which says that past 8 years have been the 8 warmest years, and we really are headed there. And as you said, the train has left the station, because 2022 was a year of floods and droughts and extreme heat and all of that you don't want to see. But coming to your report as well, and that's a concern. I mean, it's an indication. It also is a warning right now on how we are looking at 2 major developing scenarios here.
In the sense, so we have said that if there is an evolving El Nino, and Manisha, we've been talking for over a decade. El Nino, if it's evolving, we need to worry about it. I would say right now, because it's early, there is a 50% chance that El Nino will evolve. Now, what does El Nino mean? El Nino means when the waters of the Pacific become warm, precipitation over the subcontinent actually lowers. Now, in an El Nino year, now I've been doing it for 20 years. If you take 130 years of statistics, you'll find that 80% of those years are below normal, 60% of those years are drought, and there is a 0% chance of excess. We are coming out of a triple dip La Nina. We have been very lucky. Since 19, 20, 21, and 22, we've had very good monsoon, anywhere between 97 to 110%. Now, that is also unheard of. And at some point, that chain had to break. So right now, the projections are that there is a sharp increase in the monsoon. Now, these projections definitely change. We are before the spring predictability barrier. But in my experience, as far as the INSO is concerned, the January signal is a signal that we should take seriously. The only years in which El Nino has not meant a bad monsoon in India, I think one of them is 1997, and the other thing is, I think, is 2019.
Okay.
And that has to do with the fact that you had a very positive IOD. Now, the IOD projections will become more accurate as we go deeper in the monsoon. Monsoon is exactly 6 months away right now. But if the Indian Ocean remains neutral, and if ENSO keeps on, if the trend of the forecast is that the Pacific waters is going to increase, and we will know that by April, then we need to prepare, because I have never seen this scenario deliver a good monsoon. 2008, this is similar. 2013, this is similar. 9 and 14 were droughts. So we need to prepare for this. These projections do change. I have been wrong before, but we have learned as we have spent time doing this. El Nino is something this country needs to take seriously and start indexing in terms of commodity prices, water availability, and inflation from now on.
So when we talk about La Nina evolving into El Nino, and as you said, it's not going to be a good monsoon period for India, you also have said that these are still early days and perhaps it would be by March or April that we'll need to stand again and take note of this. You know, a lot of these changes impact India, even if it's not for India, because there's a lot of imported inflation that we end up with, because we export so many of our food articles. For India, you've told us what it means. What does it mean for the other adjoining countries, world at large?
I mean, see, the ENSO is a prediction which will affect everything from East Asia to East Africa to Southeast Asia. So effectively, if there's going to be a subpar rainfall over this large geography, which probably would be preceded by an intense heat wave, and you would get volatility, because you're going to get 70% of the rainfall anyway in the worst case scenario. And one of the things you see is that even in a drought year, you're going to get extreme rainfall events. That is, you're going to get like what UP and Bihar had this year, that you had long extended dry phases and sudden rainfall right in the end, when the averages actually match up, but it really doesn't work for the crops. I would see this kind of volatility becoming much more predominant in this larger region. And in El Nino year, after the monsoon, you tend to see a higher frequency of cyclones in East Asia and the upper reaches of China. That is the normal trend. A lot of it, of course, depends on how the IOD or the Indian Ocean behaves.
I'm just going to repeat myself here, Jatin, that these are still early days, but on a rank of 1 to 10, how worried are you already about this year's monsoon?
I think there is a 50% chance of this monsoon failing, which is a significant chance.
And what's your sense on the kind of heat wave that we're talking about right now? Because yes, India is looking at some kind of winters, but there are heat waves, as you mentioned, in Europe and some parts of US as well. I mean, that doesn't augur well, right, for the crops which are already standing, which need a certain kind of weather, because that is how we plant our crops now.
Yeah, I mean, I hope. El Nino does not. See, winter forecasting is tricky. And in winter, we need to figure out that our mustard and wheat, when it comes to harvest, doesn't see thunderstorms, which has happened in 2011, premature thunderstorms coming in because of the heat. And you do not see a sharp rise in temperatures in March. And that's what happened last year, right? Your wheat, the wheat grain actually becomes smaller.
Yes.
So that is a fear. And there is no way of forecasting that. In the West, the problem is that there really is no winter crop. Winter is for the aquifers to get recharged. Now, if the snowfall is not going to be there, going into their summer crop, maybe they'll have problems. Europe is going to have problems because it had a severe heat wave. Let's see, because also I should tell you, we live in a time of extremes, right? So right now, winter is warm in Europe, but nobody knows 20 days down the line, suddenly the averages will start picking up and there'll be massive snowfall after snowfall after snowfall. Maybe this is a a precursor to a late onset of winter. That is also a scenario. So you need to look at it from a three-dimensional perspective. And we tend to take the present and prognosticate it as the absolute future, which is wrong. So the probability of winter coming in is there. You've had in Delhi, living here in North India, North Indian winter has many phases. It can have, December was warm, January is quite cold. Maybe you'll have you have a winter that started late but extends right into April and May. I mean, where summer is not that intense. So you need to see it from various perspectives.
Okay, all right. Take your point. Mr. Singh, Manisha, thank you so much for taking us through that interesting conversation. And Manisha, for us, be it any month, winter and Mumbai, no connection whatsoever.
Yes, I that too.
Okay, all right. On that note, we'll take your leave in this edition of Halftime Report with the news that, yes, markets, they continue to be under pressure. Nifty is down 95 points. There's a wee bit of recovery, but yes, no, actually, they are at the day's low. So we'll keep tracking markets for you. For now, we'll take your leave on this edition. Business Lunch will take all the action ahead.